Business loans up to $2 million and above, with or without collateral. Bad credit, good credit is acceptable, lower documentation, and much more. Importantly speaking, we'll get into return on investment just a little bit. I won't get too deep into that, but that topic is so important because a lot of you right now are in a position to grow and expand. You're scaling, or you're just trying to get more money to then survive and thrive, pay off certain expenses, and a little bit more. But before I get into any of that, my name is Michael with Viral Funding Solutions. I'm a business funding expert, or you could say a business loan broker expert. And this is another way of saying that I know how to connect you with the best lenders and underwriters that are out there, by far the best that I've vetted. I've been in this market very long, in this industry. I also help out a lot of businesses, business owners of different backgrounds, shapes and sizes. I've been doing this for a while. I run my businesses in the digital marketing agency lead generation space, affiliate marketing in the health space, other verticals, other ventures, and now this has been my primary focus for a long time. So I want to get into return on investment, and then I can get into a little bit about the actual services or the products. But even before these two, what I do want to mention is be very cautious of who you are giving your information to in this space. Beware, warning to that, because there are a lot of people out there that will overpromise and underdeliver for you. They won't bring you the best piece of advice. They really won't help. They're going to bait and switch you. They're going to make sure that they do what's in their best interest for themselves, for the firm, the organization. They're going to back end deals. You have to be careful of that. And they do a lot more. And so there's some that are more reputable, but you still have to question, are they going to get you the max terms at the best rates, maximum funding? Is it the best strategic partnership and roadmap now and in the longer term? I think I can do better than that. And there is a lot better out there. And I'm here to help you make sure that you don't fall into the wrong hands, predatory hands. I'm an introvert, very cerebral. I'm going to keep this video short. I did a little bit earlier, so I do want to keep it light, and then I'll open it up to questions. So, not to go too deep into ROI, but I can drop so many examples from real estate property purchases to then getting an ROI from that, whether it's within a year or 2 years, what you sell, what you hold, what you fix and flip, commercial property, foreign nationals. I can go on and on about a lot of that. And so you think about what you invest into a property, then rehab, there's fix and flips. What are you refinancing? What are you doing to save more money or get more money out from? And what would it look like in about a year's time from now? I like to draw it up over a year at least before we go into 2 to 3 years. And if you don't have a term, let's say over a year, it's still okay. But if you were given something like 3 to 11 months, what would your ROI look like on that loan, on that line of credit? It's most important that a lot of you understand not right away what the exact service is, but what are you doing with these funds? So a lot of the times you're trying to justify taking these funds, but it doesn't make sense. The people who are like, I have 3 late payments, I'm behind on my mortgage payments, I have a lot of debt, my debt to income is high, I already have 3 payments that I'm making on $5,000 each. So you're $15,000 or in total $5,000 to $10,000. And then you have other things that have happened in the past with your credit. You have other fundings. You have other obligations, other projects, bank activity doesn't look good. You don't have enough money in the bank. Average daily bank balances are low. Not enough cash on hand. There's many more reasons. I can get into a lot more. I'll leave it there. But those are the individuals who can't justify taking money and making a good return on investment from it, or not as immediate. Therefore, you're the one searching for longer terms, or it might be the opposite. You do know you only need it for 6 to 7 months or more or less, but you'd prefer a longer term. Now, can you get that? And for what you're using the funds for is another question. So think about, what margins are you looking for? That's my question to you. In your business, what type of margins are you looking for? What do you currently have? And that can be made into many ways, not just wealth wise or money wise, but different ways. What would be your gross profit margins if you were to take this money? What would it look like in the next 3 to 6 months, a year? Well, if I took this money, if I'm paying back 27,000 on 20,000 that I'm taking, and I'm only making 25,000 on it, well, your cost of funds are up there. You're only making 25,000 when you're paying back 27,000. Does that make sense to do? Probably not. Or even if it does make sense, you're in a position right now where you have to resurface and your business needs to come up. So it's very important to understand what you net, what's the total cost. Divide that, and then you get to multiply that by 100, get a percentage. Okay, this cost me 25,000. I got 90,000 out of it. Or just do a round number at 20,000. So that's a $70,000 difference. Now you can put it into a percentage. Then we can get into other percentages, dividends. I'm not going to get too deep into all that. But you took out a loan over 3 years. In total, you're paying back 10 to 15,000, and that's putting it lightly when you do get those lower loans or those higher tier type of loans, and they're not more medium to rate high rates. And still at that point you'll somewhat see that. But if over 3 years you can't get something good out of this money, that it really won't make sense to a lot of people. You're paying too much on interest. Well, you're going to be complaining because of 9.9 or 8.9% success fee off the total credit limits. Let's say we're doing credit at 0% interest and we were able to get you that, but then there's a success fee at 9.9%. Or it is a personal term / installment loan where they expect 12 to 15%. Well, it's too high of a cost. Is it too high of a cost because of, and then I can get into that. Yeah, I just don't see myself making enough money with this money, and I already have no money in my account as we speak. I have a lot of expenses. And even taking less than that, if it wouldn't even help you, your margins are not going to be in good shape. So these are just some of the things that you have to understand when you're taking money. What are you taking money for? What are you using it for? What's your return on investment? What are your margins like now? What could they be in the future? What would it look like within a year, 2, 3 years? Break it down. What are you enduring in your cost of funds? Okay, relative to how much you could be making, 95,000 on that 7,000 cost of funds. Significant difference when you subtract the two. And most people who are positioned right now to make more money are in that tier of 150 to 200% ROI or 100 to 150%. But if you can't justify taking that money to use it like that, that's where, all the problems rise. I can go deeper into the subject. I want to make sure I didn't miss anything. I just put a few bulletin points just to make sure I'm using this as a guideline. Yeah, pretty much covered it. And I can go into a lot of examples. I made it very little of an example, but that can be drawn up to a conclusion as well on the potential amount that you could get on a return on investment from how do you use that money. But I want to keep it a little bit light. Does anybody have any questions, comments, or concerns? Anything business funding related? See, it's much easier for it to be positioned when, whether I did, usually I do, when it's positioned that way. When you go, okay, well, I'm going to be making 95,000 with that 20,000 you're getting over 3 years, you're paying back 10 to 15,000 on that. So you're paying 30 to 40,000 on that money, and you're making 95,000. But it's not just enough to say you're making that. You have to think about it and go, well, I'll be making 95,000 to cover these months and doing that. And then over the course of the next year, how would that look like? Is it going to be over the course of the next 3 months and then you're going to come back to a low amount? But at that point, you've done enough where you don't have to worry. And by that point, you've likely paid off the amount. Probably use that to pay off the funding much faster. So in 3 years, you pay that off in no prepayment penalty if there is one. Pay it off in less than a year. Like, what are you complaining about? Like, the margins are great. And you're thinking about, well, the success, those who complain about, oh, I gotta pay 12 to 15%, I gotta pay. Yes, there's a place to be cost effective, but you also have to understand why you're getting what you're getting. And if you're not gonna make enough money with what you're getting, you're not gonna justify the fee. You're not gonna justify because you have a credit profile that's substandard and you're just like in a position now where you just have so much debt and you're scrambling. And so with all of that, it's like it won't work. So I'll leave it open for a little bit and then I'll get going. I've been a little bit on Instagram lately. If you guys want to follow me on there, I've been doing some lives. I did it earlier. So feel free to go there as well. You got to think about it too. In any kind of investment, real estate or business, whatever you're doing, you have to think about what your ROI is now, what it once was, what it can look like taking money or without taking money. And if you don't show a good internal return on investment already with how you circulate your money or what you're doing already, it can be frightening for you to understand how much money you could make if you got the money you have. So if you don't have enough numbers, enough data to even use, that infers that if you put $1 in, then you can make $3 out of it instead of just putting $1 in, getting $2 out like you may have already, or you don't know. So when you don't know, you go into something thinking that all you needed was $50,000 to $60,000. But what are you doing with that 50 to 60,000? What are your costs of funds? How much interest are you paying on that? But it's less about all of those things when you think about it and you go, well, I'm going to have a multiplier by 100,000 in the next year. And I expect to be making a revenue of 20 to 50,000 a month. But the person who takes just 20,000 and in a month later or 3+ months later, you still find out they're only $500 in, $1,000 in, you may call that a good return on investment. I wouldn't, depending on what business you're in, but and some other people would say depending on what planet, but we have to learn the skill sets to drive our revenue also high enough. So I hope that's kind of a lesson for a lot of you to understand that if you're looking for funding, I have a startup, non-startup, contracts to secure, I have to grow my CBD business, whatever the reasons are. If it's not enough to justify taking 20,000, paying back 27,000, making 30, 50, 40, 50, 60, 70, 80, 90, 100, and then you figure out what your ROI from that is, percentage, and in a concrete number, and then there's more when you talk about cash flow, how much cash flow would you have? What would then you have reserved? There are more points, profitability in that. See how it all wouldn't make sense? Oh, I got hit by COVID and I really need $300,000 to survive, and if I don't get $300,000, like, I bet you that $300 is not going to be returned. Like, it feels good to have $300,000, and then you find out you have to pay all that back, and then now you don't know how to do that. You file for bankrupt, and then you think, oh, that solves all the problems. Now you have a bankruptcy without a dismissal, or you have all these discharges. You have a repeat pattern. I don't want to call it an offense, but I guess you can say that. You have been repeating the same thing. Lenders are going to be cautious of you, and especially when that falls under your name and you're applying for funding again, and when that's happened, wow, like, you could only do so much of that and still figure out that you could get approved. Too many non-sufficient funds, too many negative days, all of that stuff. And one thing I said earlier on the live is the topic of that was beware, because a lot of people are calling and calling and calling. I don't know how those people live with themselves doing that. You want money, you want money. Oh my God, how nasty is that? I don't even, like, nasty as in what they're doing, but nasty as in, like, who's the person? And so be cautious again, guys, about who you guys run into in this space, because it just like that quickly. And you haven't even asked why them. I'm not saying why the business, but why them. Whenever you work with somebody, you got to question why them. As in me, I won't get into my story in this one, but just know that I've been in your position before. I've done the whole 9 to 5. I've done all that, trying to seek my own way, to find my own way to do my own business, and I did it. It took a lot, but here I am, and that's kind of the shorter story of it. And besides that, with the loyalty and reliability and other aspects that come with it. All right, less than a minute. Does anybody have anything? Yeah, see, when nobody wants to hear the, oh, like you're telling me I can't, or oh, I didn't want to hear that. I want to hear how I can get an EIN only loan and you can't really get one. Oh, but I wanted to hear about I can get a no interest business loan. Oh, and I wanted to hear about all the fluff and all the stuff that's going to make me throw my pillow in the sky and sleep on it and wake up and feel like, yes, I feel so much better now because I know that's there. How long have you been in business? Is it a complete startup? Because you can have an LLC registered, but you had been in operations for a certain amount of time. Okay. It's not necessarily how long is the right question, but yeah, it kind of is and it kind of isn't. This would be predicated on what you currently have. So it's like, what do I currently have that will get me to 250,000 as fast as I can? And so to get $250,000 with a new LLC, it being a new startup, under 2 years, getting 250K without corporate credit, having an existing business, not having existing ways of or resources to get the funds from, seeking out certain things where you try to combine, but to get $250,000, that can take, let me answer that, that can probably take, for someone it could take 3 days, somebody it could take a month, some other person it could take 6 months, 12 months, it can take 2 years, it just varies, 10 years, it can vary depending on the file. But if we're doing in a startup, if we do creative credit-based financing, then maybe we get you closer to 75K to begin, 50 to 75K, with a new LLC being underneath 2 years. And there's a few more things that we look at. But after that period, then maybe you get a credit partner too that can assist. So it's about being creative. So if you can't get that much, then you can use multiple credit partners, whether it's a business partner or not, with better credit or as good credit. And then you do a few rounds. They can help service the debt, balance transfer. You get 75,000, they get 100,000. Combined total, 175,000. But then you can try to add another service if there is one available, or you try to do a cash out refinance on property. Any investment real estate, commercial real estate, maybe not a primary home. That's a little bit different. So if you have real estate and you combine that in equity injection with liquidity on 0% interest business credit cards and a personal term/installment loan on top, sure. And if it's enough to do 250,000 to begin with, it's there. Or if you have resources as friends and family, peer-to-peer lending, microloans won't always get you that amount. The Community Advantage Program, rarely ever do anybody get qualified or pass through that. So my then question then becomes to you is, what do you need $250,000 all for? Like, once I know what exactly you do need the 250,000 and for what business, would it be a woodworking business? As I don't want to assume 100% though. So what will the $250,000 be used for? And if it's a multiple amount of things, whether it's that or one thing, you go and say, well, you break it up, okay? You say, like, for example, I need this for marketing, I need this for materials, then I need this for equipment, then I need this for inventory. The list can go on and on. But you look at each section and you go, okay, how much percentage of it am I allocating that $250,000 to? Think about that. And from that percentage, what return on investment? You got to break it up into each category and then say, from that percentage of 10% that I'm putting into inventory to begin, how much can I get in return from the 250,000? So what you're doing is you're going from a global to a minuscule elemental granular level. So the 250,000, before I read the next part, what would be your projected return on investment? What could be your projected cash flow, your profits? If you took 250,000 all at once and you would make more money with it, obviously, is what you want to do, than what you're borrowing. A lot of times, not always does that work, but, and your cost of funds more so than that. How much will you be making if you were given 250,000? What would be your current margins now, which really are none if you're pre-revenue a lot of the times? What would your margins then look like? And margins can be used for anything, even non-binary, non-dollar amount. So if I asked you, well, what would that return on investment look like in a percentage, in a number? Are you getting 100 to 150 to 100 to 200% return on that? So if there were fees associated to the 250,000 where you had to pay like a 9.9% success fee, but you couldn't pay it because you have existing missed payments and you have existing debt obligations and all of this, that's what makes it even difficult to get approved. Or one, that's one. Two, you won't justify it taking the money. And so that's where people kind of get into this whole, like, are you telling me I got to pay this? And yeah, but to the business owner who knows they're going to be making more money with that, and even if it's slightly high because you're getting expert help, that's the person that's going to take that property and it's going to be might not be cash flowing as much as it needs to be in a certain amount of time, but then they're going to be able to sell it for more. And the market conditions are better for them. And so their ROI from that, from what the cost of attaining that property, the cost of everything, rehab, the cost of everything in that property, you look at it and you subtract that from and you multiply by, get a percentage. Think about that. And think about every little piece of that on what it costs. Got it. Do you have much woodworking experience? I would think so from the username. So if you're trying to purchase a business, that's a little bit different. But you're saying as a new startup, so you're saying you want to purchase an existing woodworking business as an extension to a different entity in a startup? Yeah, so I get it. And I know woodworking well, and I've helped out a lot of people in that. But yeah, if it's going to be a purchase of a business and you're looking for 250,000, maybe the 250,000 for the startup as I read that right. And then for how much would it cost to purchase the business, or what do they want to sell it for? That's one part of the evaluation, and then the second part is understanding, like, well, I don't want to say exactly like loan to value and try to treat it like a real estate transaction. Okay, yeah, that's a little bit undersized, but it's up there, And if it's at 150,000, you might not even have to include a banker, the lenders there. You might be able to do this seller financing without them, and then you pay them like you're paying them interest. You're paying them the interest over time as you become the new owner. But what that seller would want to see, I'm not going to get into all the financials from the seller and what you would need to provide as a buyer if it were like an SBA transaction or outside of that. But their seller financing with the seller note, if it were to be an SBA loan and we do 5% in, 5% their side, 5% your side, and there's a few other contingencies. But this could be done likely underneath like an SBA Express loan, more of a micro loan up to $350,000, and you're buying an existing business and it's eligible for. Have you done your due diligence? I bet you've done your due diligence on all of it. That's what I normally would do. I'd look through all, and I know what to look for. When I'm going to purchase a business, I know exactly what to look for. I know what to ask. And you want to look at the true price. Is it profitable? Has it been profitable over the last 2 to 3 years? Is it cash flowing? And if it's cash flowing well, how much is it cash flowing? So that's very helpful to know. There's a lot more to ask, but okay. Yeah, that's actually very good. Just looking at, I'm not saying everything else, but just what it is making versus how much you can buy it for. What's the motivation of the seller to sell? Okay. Yeah, I've seen that a lot, and that's what I'm seeing a lot of too. But yeah, at that amount, I just have to know more of the details of the seller. A lot of times, I have to know more about not just the motivation to sell the business, but what do they have? What are they bringing to the table? Have you communicated well enough with them to know what they're trying to do, and what kind of a relationship do you have with them? But if that's the case, we could try to do an SBA loan. Outside of that, what I'm doing with people too, it's creative credit-based financing. So if we could do it with like 0% interest business credit cards on top of a personal term/installment loan to purchase that business, and now you're taking on that debt, then we can do that. That's another mean. That's what other people have done and I've helped them do. You can do this where the owner would then be able to do revenue-based financing, like an online bank term loan. You could do a hybrid advance/term loan situation, but the owner's name would still be on that money that he's borrowing or she's borrowing until paid in full. But if you do and anybody else needs help with purchasing a business or anything similar, startup, purchase businesses, bio, link, click, and then the second button is where I would begin. Fill out that questionnaire. And yeah, since you have a startup, that'll work just fine. And then if you want to include, I would include the details of the business you're trying to purchase and acquire. But a lot of that, what it'll come back to is if the financials make sense of the seller, but from the buyer, when we're going to ask for about 3 years of personal tax returns, interims, we're going to need to know like what kind of revenue are you making, personal income. If you have an existing business, well, what do you have? How much money do you have in the banks? What kind of liquid, kind of cash on hand? And if it's not enough cash on hand, and also to have extra reserve in the bank as the lender best sees fit, it's going to make it difficult for that transaction to get done with an SBA loan, even if it's 10% total projection cost, equity injection, that down payment is involved in it. It just makes it all much harder, but a lot of people do get through. Does anybody have any questions, comments, or concerns? Okay, I think that's where I'm going to end it. Appreciate you guys. Thank you for tuning in, like always. Have a great rest of your Friday. Enjoy your weekend. And I will speak to you all on the next one. Take care.